I feel like a lot of people don't know where to even begin, what
Yeah.
their options are, and what that even means. And I know it can be different for different people.
Yeah.
So I'm gonna let the expert take it away.
Okay. Well, there are basically three ways to complete the tax return. You can complete it yourself, you can complete it through a service, or you can use an accounting firm, for example. So one of those three is virtually everybody uses one of those three.
Okay.
To do your taxes,
Yeah.
okay, regardless of which of those processes or processors you use, if you want to call it that, to do your taxes, you have to pull together information that relates to income and expenses that have a taxable impact for the prior year. We have a W-2 employee or we have a 1099 contractor or self-employed. If you're a W-2 employee, most of what you're going to have is a W-2, which is something that all companies are required to put these out by the end of January to all their employees.
Mhm.
And it says what you earned and what was withheld in taxes. And that goes on to the tax return, the front page, basically,
Yeah.
of the tax return. Then you might have some interest and dividends from the bank. So again, what you're doing is you're pulling all of this together. If you are self-employed, it's very different. For self-employed, you've got to pull together and calculate all of your revenue from your business for the year. And it's good to do it as you go rather than trying to figure it all out, later on, right?
On April 14th.
April at 10
The day
p.m.
before.
or April 15th at 9 p.m. And all of your legitimate deductible expenses from your business. And effectively, you take those two numbers, you subtract the expenses from the income, and what you have is your profit from what you did.
And that's the only number that's actually taxable.
Correct.
So I think something important to note here that people might not realize is that if you're a W-2 employee, taxes are taken out of every single one of your paychecks. So it's not something that you have to worry about throughout the year, really. But if you're self-employed, which this is something I recently learned, you don't get taxes taken out of your money. You're paid, and then you have the option to either be paying quarterly estimated taxes, right, throughout the year,
Right.
where you're paying somewhere between 25 and 30% of what you made for that quarter into taxes.
It varies by how much, but 25 or 30 for
Somewhere
most. Yep.
in there, so you don't owe a ton come tax season, because if you don't do that, you could owe thousands of dollars
Plus interest.
plus interest and a
Right.
penalty for
Yep.
for paying it late.
Yep.
So that's just an interesting thing, an important thing to know. If you're self-employed, you are going to be responsible for figuring out how much you owe in taxes throughout the year.
Look how much she has learned.